I'm going to explain to you why every time you buy that stock, it continues to drop in price and you're always left with the bag. And the biggest reason why is because as a retail investor, you still don't understand what a good company is from a bad company. And I'm going to break it down to you with this video. A good company has continuous revenue growth. It has great margins. And when I talk about margins, I mean gross margins. I mean net margins and I mean operational margins. A great company has always has cash, more cash than debt. A great company's business generates cash flow. And if you watch my last video, you understand that the income statement tells you the story of the company. The cash flow statement tells you if the company is actually generating cash from its main business. And a good company has a strong management team. And the way you understand if they have a strong management team is you understand, does the company has a competitive moat? Does the company has high return on invested capital? Do they have pricing power? Do they have a loyal customer base? Is the business scalable? Is that all attribute to a strong management team? No. Maybe I could run Apple if you put me at the helm because Apple is such a great company that sometimes it looks like no matter who you put on top to lead the company, it's always going to be successful because they have such a strong business. Examples of great companies, right, are Apple. I want you to go and look at Apple's revenue growth for the last 20 years. And you'll see that Apple has been growing for the last 20 years, and the market is still expecting Apple to grow for the next 20 years. Nvidia, same thing. You could go look at Nvidia's balance sheet, and you would see that Nvidia has more cash than debt, meaning that if anything happened, the company can outweigh the storm. Same thing with Google. The business is continuously generating cash. You might have good companies like Oracle, Netflix, that when you look, they might have more debt than cash. However, their business generate enough cash that they could still make their payments on debt. I want us to look at bad companies now. I want you, if you're holding any stock that is continuing to drop, I want you to check these things. Is the company still projected to generate revenue, continuous general revenue? Is the net margins of the company, net margins or operational margins or gross margin compress? And if you see that compression, that's telling you either they don't have a competitive moat, so they have to cut costs to stay competitive. They don't have a loyal customer base. Their management might not be as strong because the return on cap and the invested capital is not high. Do the companies in your portfolio have more cash than debt, or do they have more cash on debt but they still don't generate any cash? So when you have to think about this, if you have a company that's not profitable, revenue is not growing, has cash but no debt, but the business is still losing or billions of dollars, how does the company stay afloat? I'll tell you why. They dilute you as an investor. They raise debt by issuing shares. So that's why your company continues to drop. An example of some companies here: Beyond Meat, GameStop, Virgin Galactic. And you know what all these companies have in common? Is that they sell you the story. For example, Nikola, they said it was supposed to be the next Tesla. You could go look up there. They're not even they're not even on the market anymore. These companies trick retail traders to believe in the story and not the numbers. The best companies in the stock market don't have to sell you a dream to make you purchase their stock. The numbers speak for themselves. Apple generates $100 billion in cash. Nvidia is almost generating $100 billion in cash. And Google is almost generating $100 billion in cash too. All these companies will hit $1 trillion in revenue. Google pretty soon. These are the type of companies you want to look at. I'm not saying that this framework would always get you the best stock because there's more to it, but these are the characteristics of good stocks. If you find yourself always buying the stock that is continuously dropping and not bringing back value to you, you need to look at these characteristics. There's something that you're not seeing, and it's pretty easy the way I broke it down here. So next stock you're looking to buy, look at these characteristics, right? Look at these characteristics, but remember these characteristics are not everything. Thank you for coming. Like, subscribe, give me a comment. Let me know if you guys like this video. I'll see you guys for the next one.